joining us at FutureMoneyTrends.com. I'm here with Brien Lundin. If you've been to the New Orleans Investment Conference, he is the person who runs it and hosts it. He's also the CEO of Jefferson Financial, and he publishes and edits the Gold newsletter. Brien, thank you so much for joining us. Brien, I just want to start off with the gold market and specifically the junior market. It feels like we're off to a really good start in 2014. Now I'm only looking at a handful of companies. What are you looking at when you kind of talk to everybody and see the pulse of the market?
Well, the recovery has been slow, and our hope now is that it's slow and sure. You know, I just put out an alert to my readers saying that gold's been very boring recently, and I'm going to complain about that because boring is good compared to what we did last year. So it's kind of sideways. It's creeping higher. Gold itself is trying to breach some key levels, resistance levels around the 50-day moving average, which as we speak it appears to be doing, and trying to get above that 1250 to 1253 area where there's been some selling resistance. So if we can get a bit higher from here, and as this is being distributed, I believe, we're in the middle of the Martin Luther King trading or holiday where U.S. markets are closed. Mm-hmm. So gold may be able to get a leg up while the Western speculators are kind of absent from the market.
Brien, have you ever seen a market where the physical demand is soaring while the prices are falling?
No, it's interesting. The price is set in the Western Hemisphere in the paper gold markets that the speculators in New York primarily use to make their bets on where gold is going. But the demand is being set in Asia, particularly China, and to a larger degree recently India, where they're saying if you're going to put gold on the clearance rack, we'll buy it hand over fist. And that's the real trend that we're seeing. The Western gold supplies, the Western vaults are being drained of gold, and it's all going to Asia right now. And that's going to be a dynamic or a factor for gold that will play out to an increasing degree this year, and at any point in time could really light the fuse under the metal.
Brien, in the junior space, I know some really big news came out for a stock that both of our newsletters are covering, Brazil Resources. They raised $6.4 million, and which was over $1 million came from Rick Rule or with his funds. I just want to know, it's ran from 48 cents here to 63 cents just in 2014. What are your thoughts overall on Brazil Resources, and what's one of the reasons why you guys initiated coverage?
Well, I love the company right now, and I didn't love it when it came public a couple of years ago because despite the fact that I'm one of the biggest fans of Emir Adnani, who is the CEO, really dynamic young entrepreneur and executive running the company, big fan of his, big fan of Brazil, big fan of their business plan to go into Brazil and really scoop up some significant gold projects and assets in the nation. I wasn't a fan of it when it came out because it had such strong backing, financial backing, and such strong investors, and it had such a great management team that it was, in my view at the time, overpriced. It really didn't have any gold assets at the time, and I was just waiting for that business plan to develop. I didn't know that the market was going to go through a significant downturn as well. So what we have now is you've got this very well-run company, great business plan. It's acquired really the top two assets that I knew of in Brazil, gotten its total gold resources to close to 4 million ounces, and is scooping up these assets now at fire sale prices. Coincidentally and fortunately, the price of the company itself has come back to near its lowest levels ever, so it's just an extraordinary buying opportunity. And I think there's more to come. The fact that they raised $6.5 million in the middle of the holiday season shows that the company has backers who are willing to write more checks for this company, and I think it's preparing for more acquisitions.
That's good and exciting to know because a lot of companies out there, I was reading this chart on the TSX that was showing that like 70% of them have a market cap of less than $5 million. Do you foresee a big clearing out on the TSX Venture Exchange?
I think it's been happening. I think it's accelerating right now. If we see this market downturn continue, although I think it has bottomed, but if we see it continue, then it's really going to accelerate to an even greater degree. You have a lot of companies that are merging right now, some of which that are effectively, or a large number of which that are effectively zombie companies. They're not doing anything. When you can't raise any more money, the first thing you do is you cut exploration in these for these types of companies, and the last thing you do is cut salaries. And they're to the point where they're not taking any money. They're cutting salaries. They're merging with other companies. So it's really getting to a dire state. I think there's going to be more consolidation, and what you're going to see are companies that will emerge from this as the winners, the companies that are able to go in and scoop up these assets, specifically companies like Brazil Resources. I mean, they just bought a gold company in Brazil that I thought had a fantastic project, but they couldn't go forward because they were running out of money.
Now, how does this entire junior sector ultimately affect the physical price of gold? Okay, so if there's not that much exploring going on, when does this finally really start to affect the pipeline of the market? Is this going to take 5 years to play out, or how long can this remain?
Yeah, it's a long-term factor. It would take 5 to 6 years before the malaise in the junior explorers has a real impact on actual gold supplies. What's happening right now is you're seeing that the gold prices come down to right around the sustainable ongoing average cost of production for companies, which is around $1,100, $1,200 once you add in all of the costs of financing, et cetera, in gold production. So that's not to say that gold can't go much lower, but what you see happen is once the gold price starts hitting against and going lower than the cost of production, then you see supplies start to be curtailed, and then you see prices starting to rise again. So over the long term, I think what we're at generally around the bottom for the gold price. It could go lower, it could go fluctuate around this level, but I don't think you're going to see a gold price that can sustainably trade much lower than where we are right now.
Brien, I've gotten a lot of emails, and I'm sure you have this week, about the central bank in Germany and the situation with the Fed where they gave them a 50% payment. The gold was melted down prior to giving them their gold bars, I guess, that they were supposed to get their actual gold bars back. I don't know if you saw the Glenn Beck story, but I think that's where a lot of these emails are coming from. If you could just give us kind of your opinion and thoughts on what exactly is going on. What's the story with this German bank that's asking for the gold back? Does the Fed not have the gold?
It almost assuredly does not have the gold. There is some conflicting reports about whether the gold was melted before it was sent back to Germany, or whether after it was sent back to Germany, the German central bank itself melted the gold and recast it. So there's some disagreement as far as that goes. But to me, the key factor here is that when Germany asked to have half of its gold reserves that were being held overseas, just half of its reserves that are being held overseas, returned to it, the answer coming back was, that's fine, we'll get it to you in 7 years. Now, the fact of the matter is, if there was an urgent need, it could have been sent in 7 days. If, under any circumstances, it could have been sent back in a month or two. But for them for the reply to be that it would take 7 years for this gold to be sent back to you, your gold sent back to you, was an obvious admission that the gold just isn't there.
Now, what is the significance if it was melted and recast? Is that just basically kind of an admission that the Federal Reserve didn't no longer have their gold and they had to actually get gold from new mining supply?
Yes, it's an admission that the German reserves were not still sitting there in the vault in their same form that they were sent there after World War II. They were not, they weren't the original central bank gold bars, same serial numbers, etc. it's an admission that at some point since then, that gold has been used for other purposes. And in fact, throughout the 1990s, central bank gold reserves were massively lent out to bullion banks, which were able to borrow the gold at around 1% interest or less, very low cost funds, sell the gold, take that money, and then put it into riskier assets. So the dirty little secret here is that a significant portion of central bank gold reserves, including the U.S., don't exist now in their original bar form. In fact, they exist as IOUs, paper IOUs, from the very banks that were bailed out in 2008 by the Federal Reserve. So the gold ain't there, and the secret that they're hiding is that it's been replaced by IOUs or bank. And importantly, those IOUs are for gold that was borrowed at much lower prices. To repay that gold, these speculators in Western banks would have to pay much, much more in either cash or gold to get even again. For that gold to be put back in the vaults, though, it would create tremendous demand on existing gold supplies and drive the price to the roof.
Brien, on the overall stock market, what are you thinking over the next 2 or 3 years? Dow 20,000 or Dow 10,000?
Well, as long as you have the Federal Reserve pumping out the money behind it, then then anything is possible. I'm not a big believer in fighting the tape or fighting the trend, and the stock market is going up. Now, that is the result of an economic rebound in the U.S. primarily, in the Western world in general, and I think that's gold bugs have to admit that the economy is getting better. You can only hold the U.S. economy back for so long. It really is the dynamic economic engine of the world, and there's not. You have to really try hard to hold it back. And not to say that Washington hasn't been trying hard, but the economy is rebounding right now, despite all efforts to the contrary. But the stock market is not necessarily contracyclical to gold. The factors that drive higher equity prices can also contribute to higher gold prices. The key thing is that it does take away some investment dollars, Western investment funds, that could be speculating on gold. But that's that money is so hot it goes in and out anyway.
Brien, at the New Orleans Investment Conference this year, are you allowed to reveal any of the possible speakers that you might be having?
Yes, I can reveal one key speaker that we have is Alan Greenspan. And what he's going to be doing is a moderated Q&A with questions from the audience, as well as a moderated panel, which I'm calling a debate, with some other notable celebrity speakers, one of which is Kyle Bass, who I think is one of the smartest guys out there right now.
Yeah.
And through these two sessions, the key thing that I want to do is explore, because Greenspan is a brilliant guy, and as you know, he was one of the most hardcore, radical, free market gold bugs in the 1960s that ever was, and yet somehow he got subsumed by the evil empire in Washington, and ended up with himself at the levers of monetary policy that he's had so despised beforehand. So we're going to kind of put him on the hot seat and explore that and see how that transition happened and what he sees as the role of gold in today's world and going forward.
That's going to be a really exciting person to see at one of these type of events, because typically you just find the most hardcore, gold bug. If the shows, at least I go to here on the West Coast, like in San Francisco Hard Asset Show, we had Ron Paul. But that is interesting to find a very credible former gold bug who ran the Fed. I mean, that's probably going to be one of the most interesting panels and debates that anyone could see. Now, what date is it, and how much does it cost to go to the New Orleans Investment Conference?
Well, the cost right now is, I believe our cost currently is $495, and it goes up as you approach the event. But it's in late October this year, the 22nd through the 25th. And, as I say, Greenspan is going to be one of our top speakers. We typically feature, like no other show, a range of celebrity speakers and top experts very with a real focus on the resources, on precious metals and mining stocks. So it is the one-stop shop for anyone interested in investing in those areas. And they can go. Anyone interested can go to www.neworleansconference.com. Right now, I don't believe we have online registration up, but they can call in and look at the lowest levels. I think it's going to be a sellout this year.
Good. Now, I know a lot of my techies are going to want to ask this question, and feel free to answer it how you want. Will you guys be accepting Bitcoin for payment for the conference?
We haven't really thought about it. I have a lot of concerns over Bitcoin. I certainly applaud the motivations, but I think that that gold for 4,000 years has served the same purpose. And what Bitcoin is obviously an electronic or a technological evolution of the role that gold was supposed to play. But I think that evolution can happen in gold itself. And in fact, I'm working toward that with a few friends and colleagues, and I think there'll be some important news on that as the year progresses.
Great. Well, when that news comes out, please let us know, because we'd be very interested.
You got it.
Brien, thank you so much for your time. If somebody wants to check your newsletter out, it's goldnewsletter.com, correct?
Absolutely, yes.
All right. Well, thank you so much. We appreciate your time.
Thank you, Dan.